All right, welcome back, everybody. Ready for another deep dive?
Always ready to jump in.
Great. Today, we're looking at Celsius Holdings and, well, their quest to become the #1 energy drink here in the U.S.
Ambitious goal, definitely, especially in such a competitive market.
Exactly. Now we've got their Q3 2024 investor presentation to help guide us. Oh, and of course, standard disclaimer.
Yeah.
This is just for informational purposes, not investment advice.
Always good to remind everyone.
So they want to be #1, but their latest report kind of got people talking, in a maybe not so good way.
Yeah, some interesting numbers in there to unpack for sure.
That's one way to put it.
On the one hand, you see strong retail sales growth, but then,
Bam, revenue takes a nosedive.
precisely.
31% year over year. I mean, that's not small potatoes.
No, definitely not. Raises some eyebrows for sure.
So before we break down the why, can you give us the rundown, the top level numbers?
Absolutely. So revenue came in at $265.7 million. Gross margin was 46%, but that's down 440 basis points from last year.
Basis points, just a fancy way of saying a percentage of a percentage, right?
Yeah, essentially. Think of it as a way to measure changes in things like interest rates or, in this case, profit margins. So 440 basis points lower means their profitability on each can sold has taken a hit.
Got it. So less profit per can. What else?
Net income sits at $6.4 million, and diluted EPS was, well, $0. Both of those are down significantly compared to last year.
Okay, so not exactly a stellar report at first glance, but like you said, strong retail sales and a revenue drop don't usually go hand in hand. What's the deal there?
Right, you'd think those two would be moving in the same direction. So Celsius is pointing to something they call distributor supply chain optimization as a major factor. Basically, they're giving their distribution network a big overhaul.
Distributor supply chain optimization.
Hmm.
That's a mouthful. Can you translate that into plain English for us?
Think of it this way. They've got warehouses all over the place, trucks going everywhere. Some places have too much product, others don't have enough. It's messy. So they're streamlining, making it more efficient.
So consolidating warehouses, maybe?
Oh.
Renegotiating contracts, stuff like that.
Exactly. It's like spring cleaning on a massive scale. The thing is...
It makes a mess before it gets better.
Exactly. Short-term disruptions, which can impact revenue.
So they're ripping off the Band-Aid, hoping for the best.
That's one way to put it. It's a gamble. But if they pull it off, it could mean big cost savings down the road.
Okay, so that's the revenue mystery, sort of. But they're still leading the growth in the energy drink category, right?
Right. That's the interesting part. They contributed 16% of the whole category's growth in Q3.
Despite all the behind-the-scenes chaos.
Seems like it. Clearly, people still want their Celsius drinks.
So what's the secret sauce? What's keeping them going strong, even with all this going on?
Well, a few things, actually. First, they're riding that zero sugar wave. People want healthier options.
Yeah, the whole better for you thing is definitely trending.
And Celsius fits right in there. Zero sugar, low calorie, all those buzzwords, especially appealing to the younger crowd who are way more health conscious these days.
It's like everyone's looking for that energy boost without the guilt trip afterward.
Exactly. And the numbers show it too. Sugar-free drinks are more than half the market now, 51.8% to be precise. And Celsius owns a good chunk of that, about 22.3%.
Wow, they're really carving out their space.
Yeah.
But it's not just about ditching the sugar, right? It's that whole functional energy thing, too.
Right. It's not just about a caffeine jolt anymore. People want something extra, like help with focus or even workout recovery.
It's like the energy drink became a multivitamin or something.
Yeah.
Got to have all the added benefits.
That's a good way to put it. And Celsius gets that. Their whole marketing push is about functional energy, the extra perks. They even have a whole line for workout recovery. Pretty smart.
Yeah, smart move.
Yeah.
And their growth backs it up. The presentation mentioned they grew 2.3 times more than like Red Bull, Monster, Alani, and Rockstar combined over the last 3 years. That's a lot.
It is impressive. And it points to another thing they're doing right. They're attracting the younger demographic, those who see an energy drink as part of achieving something, not just a quick pick-me-up.
Yeah, makes sense. The performance-driven generation, got to have that edge. Okay, so we've got the zero sugar trend, the functional boost, the young crowd loving it. Anything else in the mix?
They're not just letting the trends carry them, they're making strategic moves too. Expanding, innovating, trying to grab even more market share.
Right. Speaking of moves, their investor presentation highlights a pretty big one. The acquisition of Big Beverages. That was a $75 million deal, wasn't it?
It was, closed just last November in 2024.
So that's interesting. They're not just focusing on marketing and the product itself. but getting into the manufacturing side of things too. What's the thinking behind that?
It's all about control, vertical integration, they call it. Owning the manufacturing means they have more say in every step, from production to getting it on the shelves.
But wouldn't that add a whole other layer of complexity? I mean, running a manufacturing facility is a completely different beast, isn't it?
Yeah, for sure. It's not a walk in the park. They're going to need to really manage this transition well, make sure everything aligns, systems, processes, even company culture.
So a potential for hiccups along the way.
Definitely. But the potential payoff, if they get it right, is huge. Cost savings in the long run, more control over quality, maybe even the ability to experiment with new products faster.
So a high-risk, high-reward kind of play.
Exactly. But they're betting the benefits outweigh the risks. And let's not forget their global push. 6 new countries this past year.
Ambitious. But going global, isn't that a whole different ball game? Different regulations, different tastes, different competitors in every market.
You got it. One size fits all doesn't work when you go international. They'll need to be flexible, adapt to each region, really understand the nuances.
More than just translating the label then.
Oh, yeah. A flavor that's a hit here might be a total flop somewhere else. Plus, they'll be up against the big guys like Red Bull and Monster, but also local brands that already have their piece of the pie.
It's like a tough crowd to please. How do you see them navigating this? What are their chances?
Well, they have a few things working in their favor. Their whole zero sugar functional thing, that's a global trend. People everywhere are getting more health conscious.
So they're tapping into a worldwide demand.
Exactly, and they're constantly innovating. New flavors, new lines, keeping things fresh. That's important to stand out, especially on a global scale.
Plus those growth numbers, they've got something to show for their claims, right?
Yep, that definitely adds credibility. But the product is just one part of the puzzle. They'll need solid distribution networks in each country, good partnerships. If they can't get their product on shelves efficiently, well, it doesn't matter how good it is.
So they need people on the ground, local expertise in each market.
Exactly. And of course, marketing, branding, gotta make sure the message resonates with the local culture.
Sounds like a lot to juggle. It's not just about the drink itself, it's a whole global operation.
It is. And let's not forget, consumer trends are constantly changing. They need to stay adaptable, keep evolving.
So what's next? What should they be keeping an eye on?
Well, the demand for healthier options, that's not going anywhere, but it's evolving too. People are getting more specific, looking at ingredients, sourcing, even packaging.
So it's not just about slapping a zero sugar label on there anymore.
Not at all. Transparency is key. Consumers are doing their research. They want to know what's in their drink, where it came from, how it was made.
So Celsius has to keep up, keep innovating.
Exactly. And another big one, sustainability. Consumers are getting more eco-conscious. They want brands that align with their values.
So it's the whole package, literally.
Right. It's not just about the drink. It's about the company's practices, their impact. Okay, so we've talked a lot about strategy and trends, but let's circle back to the financials for a second. The Q3 dip, yeah, that's a concern. But what about the bigger picture? How are they doing overall financially?
Well, if you look at the year-to-date numbers, it's a lot more positive. They've brought in over $1 billion in revenue this year. $1.023 billion, to be exact.
A billion with a B, that doesn't sound so bad.
Not bad at all. That's a 5% increase compared to the same time last year.
So maybe that Q3 dip was just a temporary setback?
Could be. Their North American revenue is up 4%, almost hitting $1 billion there too, $969 million. And internationally, they've seen get this, a 36% jump in sales.
Wow, 36%. Looks like going global is paying off, at least on the revenue side. But revenue isn't the whole story, right? What about the profit margin? How much are they actually making?
Their year-to-date gross margin is sitting at 50.2%. Yeah. And that's actually an improvement from last year, 210 basis points higher. So even with all the changes, the expansion, the supply chain stuff, they're still squeezing out more profit per can.
Seems like it. Shows they're managing costs well and pricing their products strategically, but there is a little something. Their net income for the whole year so far, it's down a bit, about 7%.
So more revenue, better margin, but less profit overall. That's a bit of a head-scratcher.
Yeah, a bit. But remember, they're investing heavily right now. Expansion, new factory, all that supply chain optimizing, it all costs money up front.
So kind of like, you got to spend money to make money.
Exactly. They're playing the long game here. It's a gamble, sure, but if it pays off, it could mean even bigger profits down the line.
All right. So Celsius, a company in transition, to say the least. It's been a fascinating deep dive, that's for sure. Any final thoughts for our listeners? Key takeaways from all this?
I think the big picture here is that Celsius is going through a metamorphosis of sorts. They want that top spot, and they're making some bold moves to get there. The Q3 numbers might look scary on the surface, but their overall performance this year it's encouraging. They're growing, they're expanding, and they're strategically investing in their future. Definitely a company to watch.
Definitely agree. Big ambitions, bold moves. It's a recipe for an exciting story, that's for sure. Well, that's Celsius Holdings in a nutshell, or should I say in a Celsius can. As always, folks, there's a whole lot more to explore out there. Keep digging, keep researching, and come to your own conclusions. That's what these deep dives are all about. Until next time, stay curious.